Hey, everybody, it's Adam Tracy, and I want to talk about security token offerings and what I'm going to not call the ideal STO term sheet, but let's say it's a very good sample, which you can see here, and I'll post in the link to this video. But with sort of like the hype with real world assets and all this kind of stuff, it's important to understand how to do this right. Okay, so number one, the first thing you understand is securities are inherently, like in corporate law, is inherently the purview of the state in which you incorporate, right? And so, in order to do this right, and this is where people get sued or worse, is that there's nothing linking a security of the company to the token that represents that security, right? And that's kind of an internal document, but it's a very key function, right? You can't just like create this class of securities and not inextricably link it to the tokenization, right? And that's typically, as a best practice, to file something called a certificate of designation with the state in which you're incorporated that says, whether it's common stock or some level of preferred stock, it's a tokenized security, right? It's a tokenized thing. So, and that's how it's represented through the token, not the share itself. And so that's step one. Okay. Step two is that you have to understand the environment. Right now, okay, in order to trade a security or make a market, you need to be a national securities exchange or an ATS. Like Coinbase, Binance, they all were sued because why? They're not licensed as either, right? So they were allowing tokens that the SEC later deemed to be securities to be traded, therefore they were violating the law. So you see there are ATSs out there, and it's like they're mostly for institutional, and there's some offshore things like that. But as it stands right now, to have a token that can be free trading, right, that could be listed on a market involves two steps, right? And this goes for just like a traditional security. One, you file for an IPO with the SEC on a Form S1, right, which is like a 3-6 month process with audits and this whole thing. Then you have to go to FINRA because FINRA governs like the market access, right? So it's one thing to go through the SEC, but that doesn't mean the minute the SEC approves your registration statement and your IPO that you can just start trading. And then it's like there's a process with FINRA. FINRA gives you your ticker symbol. FINRA, get you on the market effectively, right? So there's two steps to it. And right now, there isn't really, the SEC part's sort of the same, but FINRA really hasn't adopted rules for that to happen because no national securities exchange is really offering tokenized securities trading, right? So that's the big problem. So when you look at an STO in today's environment, to sell common stock, right, is a problem. And the problem is that, and I always harp on this, if you buy and invest in private company stock, how are you going to make money? You cannot sell that share of stock. That company would go through the roof, right? You're making $1 billion a year. That doesn't mean you make a dime because one, you can't sell it anywhere, right? And two, even if the company's making money, if you own common stock, the board of directors of that company do not have to declare a dividend, right? So how do you make money? You just sit on it till you die. Hopefully that, first of all, who makes money? Second of all, if they have the money, they have to have the largesse to want to give it to you. That's tough. So in most cases, for like an STO, at least what I advise people is structure it as preferred stock. And so preferred stock typically takes away the voting right, of a common stock where you have like the rights to vote on corporate affairs, which rarely ever matters because the promoters, the owners of this, aren't going to give you more than 50%. And preferred stock trades that right to vote for a preferred dividend, right? A dividend preference. And typically, what I advise people in the context of an STO, make that like a coupon dividend. So it looks like debt, right? So let's say it's $1,000 per share, as you can see in this example here, and you're offering a 6 to 10% annual coupon. Well, that's just like a note, right, that pays 6 to 10% interest. But the failure of the company to make the payment doesn't constitute a default where you can sue them. But it builds, right? So every time that the company doesn't make that payment, right, that dividend payment, like usually semi-annually, it just accrues. And they can't do, because of the dividend preference, issue a dividend to the common stockholders, e.g. the owners, without first having paid all of the dividends that are due under the preferred stock. And if there's money available, meaning like there's a profit, it has to be paid, right? So you can structure that where an investor looks at it and says, okay, I know that I'm going to get a payment if this company makes sufficient enough money, right? Enough profit to pay the dividend. And so that's really the only way. Well, I'm not saying the only way, but that's a great way to do it, as you can see in this thing, because I look at it and an investor and say, okay, fine, I can't trade the stock. There's no market for it. You could add a convertibility clause that, like, if it does start trading, I can convert to tokenized common and trade and all this kind of stuff. But at least I know if the company starts making money, I will get a return for X amount of period. And, you know, as you go through this, and the link to this term sheets in the description, but as you can see, it is like a very sort of basic thing, but other than the fact that you have to account for, and it's not very different than like an equity term sheet outside of some language about, you know, the tokenization and how that works and all that, outside of the fact that it is a preferred stock with a coupon, because you have to offer an exit, right? You have to offer an exit. Like, one, because it's going to make it saleable. Two, because if you get into something, you're selling common stock and the people don't realize what's going on, right? And they don't truly understand what they invested in. And then with crypto and tokenization, that is super common, right? Because they don't understand like restricted stock versus publicly traded and all that, just because that's not their nature, right? Like you buy a token in an IDO, you can sell it like right away. It's just how it works. Well, this isn't how the securities world works, and this is what you're dealing in, right? You're just adding in this layer of tokenization, but a lot of crypto investors don't really differentiate between the two. And it's the guy that invests like $1,000 who's going to call you 99 times a week, right? Because he wants like his money back, or he wants a return on it and things like that. So it becomes this administrative headache, whether you're doing things right or wrong, right? So the whole thing is liquidity, right? And to put these triggers in there on top of what I just discussed in terms of like the coupon and all that, which you see here, which is like a redemption, right? Like if the company earns, you know, has an investment of a certain amount, the preferred tokenized shareholders get bought out. A convertibility function, you see right here, where it says, okay, fine, if, you know, at any given time after X amount, I can convert my preferred tokenized stock into common stock, which could be traded, right? Like if the company were to go public, okay? Or an optional redemption. Anything that offers this back and exit plus that coupon in the middle is going to be the most saleable and most like palatable route to go if you're going to tokenize things. Because in reality, the tokenization is almost like a gimmick, right? Like, yes, from the perspective of like administration, transfer agents, and stuff like that, fine, it's great, but it's really not any different than just like a traditional equity raise. So you have to structure your term sheet to understand like what's coming down the road. Will there be a securities token exchange? Will there be an ability for, you know, like me to trade this at a given date? And like, yes, I think that's coming, but it's not coming now, like today, right? So in order to tokenize something, you have that sizzle. People will buy it, but you have to give them, especially the sophisticated individuals, a reason to think there's an exit and I'm going to earn money through something, and you're typically the coupon. So I'm Adam Tracy. You have questions about structuring your STO, finding investors, listing offshore with some of these exchanges, anything related to an STO, check me out, Adam at adamtracy.io. And again, the link to that this term sheet right here is in the description. I'll talk to you next time. Cheers.